Hello everyone, welcome to session 3 in your accounting journey. This week we are going to be talking about the fundamental accounting equation and taking a look at the financial statement. Let's take a look at the learning objectives. First, we are going to analyze the fundamental accounting equation. Next, we will define the meaning of assets, liability, equity, revenue, and expenses. Then we will identify assets, liability, equity, revenue, and expenses accounts. And then we will finish up with taking a look at the basic financial statement. This topic, it's a backbone of financial accounting and very, very important. Now let's start with what is the fundamental accounting equation. So we will break it down into 3 pieces. First, property equals financial interest. Second, property can be looked at as assets. So assets equals the financial interest of creditors and owners. Finally, we will get the fundamental accounting equation. This is important. And the last one, assets equals liability plus equity. Now let's take a look at some definition. In this part, we want to start from assets. What is an asset? Assets are things you own that you can sell for money. In accounting, an asset is any resource that a business owns or controls. It's anything that could be sold for money. In classification of the assets, the first category is current assets. Current assets are assets that are expected to be turned into the cash within a year and include cash or other things can be used as cash like account receivable, inventory, and prepaid expenses that's in turned to the cash within a year. This part very important. Next one is a liability. What is a liability? Liability is something a person or a company owes, usually sum of money. Liabilities are settled over time through the transfer of economic benefits, including money, goods, or services. You know that recorded on the right side of the balance sheet, and it's include loans, accounts payable, mortgages, deferred revenue, bonds, warranties, and accrued expenses. These are some example of the liability. Liability, like assets, has classification, and the first one is current one. Current liability means that you should pay within 1 year, but the other liability is more than 1 year. Now, what is equity? Equity is the owner's financial interest in the company. It means that the owners of the benefit or profit of the company, it's the equity. It includes common stock and return earning. So, guys, in accounting, we have 2 kind of accounts. One of them is just only belong to the balance sheet that includes assets, liability, equity, and the others include of or belong to the profit and loss statements that include of revenue and expenses. Now let's go for understand what is the revenue and expenses. So now start with revenue. What is revenue? Revenue increase equity. Revenue is income that a business earn. For example, we have 2 kind of revenue. One of them is service and the other is sell. Service is just for a company that's provided and performing as a services to the customers, like a accounting company just only provide accounting services. And the other example of the revenue, it's selling a product to a customers that this kind of company should buy and sell the products. This is the sell one. The last account is expenses. Expenses is vice versa of revenue. Revenue increase equity, but expenses decrease equity. Expense is a cost of the operation for operation of the company. For example, for rent expenses, advertising expenses, salaries and wages expenses. These are common expenses in all companies, but depends on an industry, depends on a company. Expenses are different. We have a variety of the expenses. Now let's move over to the 4 financial statements. It's very good topic. Let's start with income statement. Income statement is the other name of profit and loss statement. Income statement just only it shows operation for a period of time, whether it's for a month, a quarter, or a year. Next one, we have the return earning statement. This is also for a period of time. And the next one is the balance sheet. This is just only for a specific date of the time. And finally, our fourth financial statement is the statement of a cash flow, which is for a period of time as well. Statement of cash flow is not going to be discussed in this class, in this session, as it's a little bit more complex. Now, let's take a look at the sample of income statement and completely explain what is it. Now, let's take a look at the sample of income statement. Revenue minus expenses equals net income or net loss. If revenue exceeds expenses, there is net income. Take a look at the sample income statement. Notice the proper title. The title answers the questions who, what, and when. Who is the name of the company? What is the name of the statement? And when is whether it's date, in time, or for period of time. For example, it's for the month ended November 30th, 2022. Now let's take a look. Revenue got service revenue of $10,000. Then we have expenses. We have rent expenses, salary expenses, and telephone expenses. Then we see our total expenses of $3,750. So we take our revenue of $10,000, subtract out the total expenses, and then we got net income of $6,250. Keep that number in mind because it's going to flow to the next statement. The number was $6,250. Keep it in your mind. The return earning statement. Return earning statement is the amount of net income left over for a business after it's paid out dividends to its shareholders. Notice we have a proper title, the who, what, and when, and then our return earning statement. We have our beginning return earning of November 1st. It shows that it's 0. We are assuming that the company just started operation on November 1st. We are going to add in net income. Recall this 6,250 came from the net income from the income statement. Then we will subtract our dividend of 750. Then we have ending return earning of at the end of the November 30th for 5,500. Keep note of that number because that will follow into our next statement, the balance sheet. The balance sheet. Equation is assets equal liability plus equity. Notice that is our fundamental accounting equation for the balance sheet. We also have our proper title, who, what, and when. But for the balance sheet, the date is a specific date, November 13th, 2022, versus the income statement and the return earning statement was for a period of time. The balance sheet. sheet. So on the left hand side, we have assets. We have cash, account receivable, and supplies, prepaid rent, and equipment. Then we have our total assets of $24,000. Assets are listed in what we call order of liquidity. Order of liquidity means that the easiest of converting to cash. So cash is always first. Then on the right hand side of the balance sheet, we have our liabilities and stockholders' equity. We have two liabilities. Accounts payable and unearned revenue for total liability of $7,500. Then in stockholders equity we have common stock of $11,000 and the return earning $5,500. Remember, I'm going to pop back to the statement of return earning. Guys, important notice, our ending return earning $5,500 flowed right into the balance sheet where we have return earning of $5,500. We will total up our stockholders equity from the common stock and return earning for $16,500. We will total our liabilities and our stockholders and it's $24,000. Which exactly ties out to our total assets. So we are in balance. Thank you so much for joining me for this session. I look forward to talking about analyzing transaction in the accounting cycle next session. Stay tuned for this for next session. So you can follow me in Instagram and YouTube and Facebook also. My ID is salaf.accounting. Thank you. Bye.